40 years ago, as a young man, I was trying to get into the farming business, and I went through the inflationary period in the late 70s and early 80s. Very exposed, operating in debt, interest rate controls had gone off. It was a wild ride. So that brings me to where we are 40 years later. Over the past several months, we've experienced a surge in commodity prices: crude oil, natural gas, corn, soybeans, wheat, materials like lumber and cotton. What do you believe has been driving this rise in prices, and do you expect this to be sustained for some time to come? And I'd first like to turn to Mr. Soloman and Mr. Gorman to weigh on this, if you would please.
Thank you, Congressman. I appreciate the question. It's certainly something that we've been spending a meaningful amount of time thinking about. I think there are a number of factors that have been affecting commodity prices, and I think as you stand back and look, the shutdown of the pandemic and the dramatic contraction of the economy had a profound contracting effect, and now we're opening up very quickly. And so we have the combination of demand picking up very quickly and supply production and availability and supply chains and distribution chains not being as full as they would normally be. That's obviously leading to inflation in prices. I think what's hard to see at this point is whether or not it's going to be transitory or whether or not it will continue or be more sustained. I do think it's something to watch very carefully, and the speed of the recovery combined with other fiscal actions or monetary actions we take will obviously have an impact on this. Hopefully the Fed can manage appropriately as we go forward in what's obviously going to be a strong economic pickup from a demand perspective.
Mr. Soloman?
Representative Lucas, thank you also for the question. And coming from a long line of farmers from the outback in Australia, where wheat and sheep were the family product, a lot of sympathy for the space. Commodity prices are simply a function of supply and demand. We've had interrupted supply, we've had a global recession, and now we're getting extraordinary demand. We've never had this kind of global synchronized growth that we're going through now. So you're going to see surges in prices, but as more capacity is brought online, whether it's oil rigs or more mining around the world, these things rebalance. But right now we're in a surge.
I'm just a little nervous, having increased the national debt from 20 trillion a year and a half ago to 28 trillion. That seems like a rather expansive increase in the monetary supply. And as the economy picks up, and what's the term, velocity of circulation increases, I'm just nervous. Anyone under 60 did not live through that period. But when Mr. Volcker decided to wring it out of the economy, it almost wrung a lot of us out of existence. That said, second question. As Congresswoman Wagner discussed, the Biden administration has proposed more than $4 trillion in spending for the American Jobs Plan and the American Families Plan, of which the administration plans to finance with a hike in corporate and individual taxes. The administration's also proposed a global minimum corporate tax rate. While we should level the playing field for U.S. businesses, some argue that global minimal corporate tax rates would be disadvantageous to U.S. companies. Mr. Diamond, could you comment on this concern and how feasible this proposal would be to actually achieve a global tax rate?
Yeah, so America would be the only country, I think, in the world that would have what you would call a global tax rate. I pointed out earlier that going from 21 to 28 isn't the issue, because people say it's halfway back to what the tax cuts were, but the tax increase because of something like that is actually 4 times the tax cut of 2017. There's no question in my mind that at the margin, not for every decision made, but at the margin, that will drive capital and eventually brains and R&D and investment overseas, and that would be a mistake for America.
Ms. Frazier, could you share your thoughts on how feasible a global minimum corporate tax rate is?
I think it's very hard to get other countries to sign on to an equivalent program, despite some optimism of doing so. I think that will be extremely difficult, and therefore it could put the US in a position of being less competitive around the world.
My background representing an agriculture and an industry, energy industry kind of a district, those international markets are critically important for us, and we've gone through trade wars beyond belief for the last 50 years trying to have fair access and be able to compete. I'm just very sensitive about undoing the progress we've made, just as I'm very sensitive about setting off the Carter era kind of an inflation wave too. Thank you for your comments, and yield back the balance of my time, Madam Chair.